Welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. Now, FY17 was a fairly kind year for the investor. Equity markets had a great run. We saw the benchmark indices hit some very, very dizzy heights. There was a bit of sparkle in gold. Taxes didn't go up so much. And the economy, you can say, more or less weathered the entire demonetization drama. The question now, a new financial year is upon us. So what will FY18 bring? Is it going to be a wealth-creating year? Will you see your money grow? Which are the asset classes to be in? What are the funds to be in? To answer some of those questions, I have with me NIMESH, who's the MD and CEO of ICICI Prudential Asset Management Company. NIMESH, welcome back to the show. I remember this conversation exactly a year ago because we had asked you back then to also sort of look at the crystal ball and tell us what you think. So, as you're looking at now FY18, do you get the sense that money is going to be made?
We always felt equity with a 3-year perspective. Last year when I came on your show, exactly 1 year back, at that time I had said with a 3-year view one should invest in equity. So right now also I'm consistent and I'm saying with a 2-year view people will, while the last 1 year has been good, but even in the next 2 years we believe that equity can play out very well, and we can discuss the reasons why we are saying that.
Absolutely. The difference is that back then we were just coming out of sort of a low for the market, and then the takeoff really happened.
Correct.
Now when we speak, we're sitting at record highs. Right. Is there reason to be worried if you're an investor?
Markets, I would say, are very fairly valued or just better than fairly valued also. Maybe you can say it is not a cheap market. Is it a it's a reasonably priced market, and from here one has to be careful as one is investing. But is there a risk in the market? Markets will have the flows risk. But look at what is happening. There are two parts. One is fundamentals, one is flow. So first, let's discuss fundamentals. I believe last 3 years earning per shares of companies have not increased. Right? The beauty is that India was at an all-time low ROE. Last year when I came to you, I said the ROEs of Nifty companies are around 12. It has marginally improved. The return on equity has marginally improved. So we believe if the earning growths have not happened in the last 3-5 years, and companies have set up capacity which have not been fully utilized. A cement plant which is working today at 70% capacity, 2 years down the line will work at 90% capacity. So this is when it works, the operating leveraging kicks in, and 2 years down the line, I believe that the earning per shares of a lot of companies will be better than what it is today.
But then aren't stock prices showing a bit of overexcitement in that case? I mean, yes, of course, they're discounting the fact that this catch-up is going to happen. But as you yourself mentioned, that there's been very little evidence of that.
So 18-19, if you see what is the market discounting today, and now we have started like in the next 3 months, 6 months, if we have withstood demonetization quite well. And beyond this, we'll start discounting 18-19. On 18-19 basis, the markets are at around 17. When we project the 18-19, and in 6 months time people will start discounting that. And in the next 6 months I expect we also have to understand it's a momentum driven market right now where the flows are tremendous. And the quality, because we are sitting in a mutual fund, I see my quality of funds coming in. The quality of funds that are there are from the the retail of India is investing, the interiors of India is investing, the common man in India is investing. My ticket sizes are going down. It's a very healthy sign that my ticket, so it's not only the HNIs who are investing, the common man is also investing. So the common man, there is no alternative but equity for him. The TINA factor is working on equity, where people do not invest in
TINA factor.
There is no alternative. So the people are not able to invest in real estate. People are selling real estate. People are trying. There is no point in investing in gold. The financial savings in this country are increasing. As the financial savings in the country will increase, a part of it will come towards the equity markets, and people have realized that a very good work done by media, where a lot of awareness about mutual funds is much higher than what it was even 3 years back.
How do you see the rest of the environment, whether it is a lot of the global noise that we are getting, what is happening in the US with their tax reforms, whether it's politics here in India, whether it's the interest rate cycle?
I believe that is a question mark which nobody has got a very clear answer of what is going to happen in US. How fast, what is the slope of the rate when the interest rates go up? Will it be a very rapid increase in interest rates, or will it be a gradual increase in interest rates? In 2003 to 5, it was seen that when the interest rates in US was growing, their allocation to emerging market kept on growing. as interest rates of India, because there was not much money to be made in bonds over there. So people moved to emerging markets, allocation increase. Whether we are seeing similar pattern in the initial 1 or 2 months, but international flows will be a question mark, because a lot of things can happen in Europe, as we know of the political uncertainties in Europe, policy changes in US. All this can have an impact on the international flows. But if you see October, November, December, January, the international flows were negative. Last whole year was not a great year for international flows in itself, but still the markets did well. So I believe that there is uncertainty of international flow, and that will continue. So we'll continue to see volatility going forward also.
What about sectors? I mean, is there something that you're sort of more favorably inclined towards? You're an infra fund, and I was just looking at the last 1 year returns. Of course, last 5 years, 3 years have been challenging for the sector overall. But last 1 year, we're talking about 28%. I noticed some of the other funds that have been loading up a little bit on technology over the last few months as well. Is there a sectoral bias?
Our view on, we like things which have not performed well in the past. India is a great country to invest because things average out. So when returns, we have been saying it since last 1 year, that invest in infrastructure. But you are taking a calculated risk, I would say, on that. Would I put money in infrastructure funds? I'll put more money if I am a investor who understands equity well and wants to play this call. Playing on an infrastructure call is not a bad idea, because those companies have not done so well with a 5-year, 7-year basis. The focus that the government has on infrastructure, I believe, whether it is roads, whether it is ports, whether it is power distribution, I think things are changing in the country, and they are changing for the good, permanent good. So we believe infrastructure is a great theme to play. On sector-wise, we also like, it's a slight of a contra call, that technology is very well priced. Everything else has gone up, technology has not gone up. So with the current price, and our view is technology is also a sector that, another area which is very badly beaten is pharma. So pharma also is a sector that we like, because we believe our companies will be able to adapt to the changes. There have been headwinds from US.
Both pricing and the FDA action.
So, but our companies will learn to withstand that. They are very fine companies. They have got this temporary setbacks, but they'll be able to come out of it. It's company specific, but I believe that pharma sector in India will do well.
All right, fantastic. Now that we've understood the sectoral call at ICICI Prudential AMC, what funds does NIMESH think perhaps fit your style? What are his personal favorites? We're going to talk about that after the break.